Great to see you. Dave Cole, CEO, EMX Royalty Corporation here. We trade on the New York Stock Exchange. We trade on the Toronto Stock Exchange. We trade a few shares in Germany every once in a while. We love to accumulate royalties around the world. We do that in the metal space, dominantly copper, gold, lead, zinc, silver, cobalt, nickel. What did I leave out? And we do that via two mechanisms: through the organic growth of a royalty portfolio by execution of the prospect generation business model, where we acquire large tracts of prospective mineral rights, add value, sell them for cash payments, share payments, and royalties. We also buy royalties to augment that portfolio. We've been doing this for 19 years.
How are you? I haven't seen you since, I haven't spoken to you since August. You've been a little bit busy since we last spoke, so I thought it was time for a catch up. Definitely. Did you have a good Christmas and break?
Sure did. Yep, spent some time with the family. Always nice.
Always good. Okay, well, you're back into the thick of it, and I think lots of people, lots of questions, and I know you're doing the rounds as well. So I don't want to, not necessarily going to cover old ground here, but I want to kind of get into the thinking of what is to come. So you, for a long time, were perceived just purely as a prospect generator. Not a lot happening on the royalty front. It was kind of more of the same, and then you made some big moves towards the end of last year. Still happy?
Super happy. And I would beg to differ a little bit, if you don't mind me just adding in some detail there. We've purchased royalties as part of our business model for a long time. We bought the royalty on the Carlin Trend, for example, when we bought Bullion Monarch. We purchased the royalty to augment the portfolio that we grew organically that covers the big discovery in Serbia that I'm sure you're going to want to ask questions about, because everyone's asking me questions about that right now. It's very timely. So we've always been a purchaser of royalties and an accumulator of royalties through execution of the prospect generation, what we call royalty generation model. So that's nothing new. What is new is that we found two fairly large transactions that we were able to complete on that met our valuation criteria in quick succession. So it was not a change in our business approach. It was rather fortuitous that these two landed in quick succession. It's right down the alley of what we've been doing for many years.
But it may in your mind have been that, but for the market and looking at your share price for a long time, for 16, 17, 18, it was flat because there was a certain pace to it. I'm saying you've injected some adrenaline into the mix here, and you've gone big. You were sitting on a big cash pile for a long time, doing nothing with it, and you've gone and spent it, right? So that's what I mean by this. There is a change in that sense. There's a change in ambition, quite frankly. I mean, do you look at it like that?
So I can understand completely why it would look that way from the outside looking in. I know from internally what we were doing does not feel that way. So ever since we liquidated the Russia strategic investment, which was a cash infusion of 68.x million USD into our treasury, we said that we want to deploy those monies buying cash flowing royalties and other accretive transactions. We had a couple of base hits, smaller transactions where we deployed some of that capital. And of course, we're always funding our organic growth, which is our hedgehog, that royalty generation, whilst we were continuing to look for larger transactions. And there were many transactions that we bid on and lost because we don't bid to the same extreme as many of our competitors do, and many that we just simply passed on. And it reminds me of what Warren Buffett says: there's no called strikes in investing. We're happy to stand at the plate, say, throw us another pitch. And we did find two pitches that we wanted to hit, swing at and hit, and we're very pleased with those transactions. And we did deploy the monies that we had and then more by leveraging up. I'm fine with leveraging an investment when it produces immediate cash flow.
Well, absolutely. It's front and center at that point, rather than again waiting for cash flows further down the line, because there's a different sort of conversation to have. But let me come back to this, because I've been asking royalty CEOs the same question, which is because they make the same claims. We buy well. We are smart investors. We buy cheap. We pay less than other people. They all say the same thing, right? So I'm going to ask you to define how do you judge that? What are you looking for? Why did these two deals get over the line when the others that you bid on haven't?
Yeah, let's talk about the SSR portfolio first. That was the larger of the two transactions. Yep. And I think that the reason why we were able to win that, one, I'd like to point out that we actually are the ones that encouraged SSR to put that out. We wanted to bid without going through a process. Of course, their board said, well, we have to go through. We'd be happy to sell to EMX. We'd be happy to have EMX equity as part of that transaction. We want to be exposed to their upside. We want to be exposed to their generative side of their business as well. So there's a lot of synergies there that ultimately resulted in this, but they wanted it to go through process to make sure they got a fair price, which, that's all well and good. And ultimately we won the process, and we won it because they believed in our equity. So that's a key point.
Yeah.
But the reason why we were able to get a much better internal rate of return based upon our modeling the future cash flows from that portfolio than we could in other transactions that are being bid way out of any realm of reasonableness is because the assets are in Turkey. And I think that many of my competitors are reluctant to go to Turkey. Turkey has some headline economic issues with devaluation of the currency, et cetera. And we actually know the players in Turkey. We know the counterparty here. We have employees and consultants of our company that have close working relationships with them. And we have a continued relationship through SSR now as a shareholder who are joint venture partners with Lydia, et cetera. So we feel very comfortable with this. We have been working, and I personally have been working in Turkey for quite some time. I was the exploration manager of the Turkish business unit for Newmont Mining Corporation before I left to found EMX Royalty Corporation. So, so I think that we were able to capture some inefficiency, and we've talked about that inefficiency before, right? I believe that political risk is fully, if not overvalued in the marketplace, whereas technical risks, engineering risks, geologic risks, metallurgical risk are commonly undervalued in the marketplace, and that does create an inefficiency that can be captured. And I believe that we did that in this particular transaction, and happy to augment our existing Turkish portfolio. So that's one of the reasons why we're able to get that one across the line. So I think that answers the question with respect to the SSR portfolio.
Right, and then let's talk about the other one now. I might as well get that over, package that up together.
Yes. And you're going to have to pay up for a currently cash flowing copper royalty in a top tier country such as Chile, Chile has its own issues, right? Everywhere in the world has issues for the extractive industries. Let's be honest. And we view this as a 30-year bond that pays in pounds of copper. The official mine life is 17 years, but there's the footprint of the royalty is large. There's alteration systems. The geologists that are within us all are very excited about the long-term exploration potential here. We see this as an asset that will produce for decades into the future, with production upside from the existing infrastructure, in addition to the possibility of further mine expansion in the future. So, of course, we have to pay up a little bit for that, but look at what bonds trade for. And they're obscene valuations. So this is a cash flow of copper. We're very bullish copper. Hard not to be bullish copper. Anybody who's not bullish copper isn't looking at what's going on in the world today. And we love to have that current cash flow and that exposure to a long-lived producing copper mine in Chile.
Right. Okay. I'm actually going to ask you now to talk about Serbia too, because what I want to do, I want to package up, I want to have a conversation about risk, and discounting risk and how you view risk as geologists, but and possibly how you view different jurisdictional risks, because it's really, really important here. Because well, let's have that chat, because then we'll have some good questions and probably some good conversation too. So Serbia, Timok, things haven't quite worked out how you expected. So what's going on there? Arbitration looks like likely.
Yeah, and let's go back to the very beginning and understand how we got into Serbia, and how we ended up with the royalty portfolio that we have through the Timok Magmatic Complex, which is the largest copper and gold producing region historically in Europe. And the Timok project specifically is the largest ever discovered copper gold deposit in the history of Europe, and is now just now coming into production. We came into Serbia after the Balkan Wars. We became the first foreign company to be granted exploration licenses in 40 or more years. We did what we do as part and parcel to our business model on the organic side. We added value. We sold it for cash shares and royalties. We sold that to Reservoir. Reservoir went on, did a transaction with Freeport, and they made a discovery on the Brestovac East license, just off the border of the license where we had a royalty. And we had our ear to the railroad track. We understood what was going on there. And we were able to purchase the existing royalty that Euromax held quite inexpensively. So we bought that royalty for 200,000 Canadian dollars very early in the discovery history. And so that augmented our existing royalty portfolio within the district, which we still have. And the royalty was written in a very strange way because the license that Euromax had used to be a Freeport license. And when Freeport formed a joint venture with Reservoir, and they said, we'll work on this license that you have acquired or are about to acquire from Euromax, as they will have also acquired the licenses from then Eurasian Minerals, which is now EMX Royalty Corporation, and advance the district scale opportunities there. And so that royalty agreement, which is filed on CDAR, so you can read it. Everybody listening to this can read that. They can download that document and read it for themselves. It had the ability for the royalty to be diluted by Freeport in a pro rata manner relative to the amount of direct project equity that they earned. And our interpretation is that they never diluted that. And that's based upon strong legal advice that we have been given, and we stand by that. We believe it's a 0.5% royalty. Does not surprise me at all that the counterparty, any major mining counterparty, would try their very best to figure out how that royalty would be diluted, because it's worth a whole heap load pile of money. And so another beautiful thing about that royalty agreement is that rather than it being a lawsuit and a long protracted court case, it goes to binding arbitration in British Columbia. British Columbia, of course, is a signatory, as are all the provinces in Canada and the United States, and Serbia and China are signatory to the New York Arbitration Convention, also called the New York Convention, which says that binding arbitration that's settled in any member state is applicable across all other member states. And so binding arbitration is usually easily implemented, and we will go through that process and vigorously support our 0.5%. The other side, Xinjiang, completely recognizes the existence of the royalty, and they have taken the view that it was diluted to the most possible, which was down to a 0.125% royalty, which is 75% dilution. We believe that that is simply not the case. And we will vigorously pursue that. I'll point out we paid 200,000 Canadian dollars. So even if this were, in the worst case scenario, settled at 0.125, which we do not expect, it would be a massive financial win for us because this royalty will pay substantially as the global resource is nearly 2 billion tons at nearly or just over 1% copper equivalent. So this is a huge deposit. It's going to be in production for decades into the future. Even at a 0.125%, it's a massive win for us. At 0.5%, it's a flat out company maker. We feel our odds are very high.
Right, but 0.125 is not as promised for your shareholders, right? So you believe strongly, vigorously, however you want to couch it, that you are right and Xinjiang are chancing their arm. That seems to be how you're kind of couching this, right? I think that with it'd be really useful to understand the arbitration process. I get where it sits. Who is the arbitrator? Is it just a sort of BC lawyers who are both sides agree to?
Yep. So it follows the British Columbia arbitration protocols. We pick an arbitrator. They pick an arbitrator. Those two arbitrators pick a third. If they're not capable of doing that, the court appoints one. Then those three go at it and they review all the different information, and each side pays their pro rata fees. And then they tell us how it is.
BC's a small.
I'm oversimplifying it.
Yeah, just a bit. But
the process will take between 6 and 12 months, in most cases 8 or 9.
Right, and therefore not expensive either. We're not talking
vastly less expensive than a lawsuit.
Sure, and BC is a small province. Does everyone know everyone? What's the chances of actually getting a proper result here?
I think high. Well-educated folks in British Columbia with the altruistic viewpoint that like to follow the law. I can't imagine a better venue.
Would you be happy with 0.25? You told me you're happy with 0.125. Would you be happy with 0.25?
So I'd be double happy 0.25 than 0.125.
Right, but again, it's not as promised, and those sorts of things drive share price, etc.
So let's go back to the promise thing. So it's been well documented that this royalty had the ability to be diluted in our materials, and of course the agreement itself is filed on CDAR.
But for some financial recompense, right? There'd have been some cash element for that at least. Is that how it gets diluted? How could it have been diluted previously?
So the way that the royalty was to have been diluted, if it would have been diluted, was through direct project expenditure by Freeport and only Freeport. And that direct project expenditure in exchange for project equity never occurred. It occurred at a subsidiary level. And that is specifically disallowed in the document, and feel free to read the document yourself.
Okay, so right, so you're saying it did happen, but at subsidiary level, which according to you and your interpretation of the document, that was not allowed for.
Correct.
Okay, that'd be interesting. Okay,
and not just my interpretation, but the interpretation of our legal advisors.
Right, we love lawyers. You pay them enough, they'll think whatever you want. Right, but it's a big issue, as you're suggesting, even if you did end up, honors even on it, and you did split down the middle, it's still a decent contribution to you. Can I can I come back to SSR then? Right. Okay.
Yes.
You talked about a couple of things there. Obviously, you've got to take a view. Let's deal with Chile first. Nice, easy one. Chile has been through a political process, and lots of wild statements put out there by some of the candidates about the fact that they're going to tax Chilean copper producers 80%, right? They are going for the jugular on that one. I think it's widely accepted that perhaps was a bit outlandish, and the process they're going through on the rewriting of the constitution would suggest that there was some uplift in the tax, but not to those sorts of levels, more in line with Australia or so, right? So, but you've had to take a view on Chile as a destination. Is that kind of broadly your view on Chile?
We see the risks there. We think that they are real in some regard, but probably over dramatized by media. And of course, there's saber rattling going on. That's not unusual. And it's always unfortunate when governments attack the extractive industries. Extractive industries, unlike a factory that makes blue jeans that can move to any country that they want to move to, the extractive industries have to work with the resource as it exists in the ground. And so that makes us more sitting ducks for this type of behavior on behalf of governments. It's always disappointing, but I'll point out that it's not uncommon throughout the world. And this is one of the battles that the extractive industries need to face, is to better educate the public, our critical contribution to society. And, we're not just bad guys raping the earth for profit. So we're providing the world with key components for our lives.
No, I get all that. I get all of that. I want to focus on you and your shareholders here, okay?
Sorry.
Rather than the big picture of selling mining as good guys,
sure,
right?
Sure.
So let's pop back up to the other deal that you did there, which is again, you got to have because of your history in Turkey, you feel that that's like another country, another jurisdiction that but you've had to take a view on that, and I think you've outlined and explained perhaps why you feel a bit more comfortable there than other people might, right? So collectively, we've got Turkey, we've got Chile, and we've got the Timok issue with in Serbia, right? So jurisdictional risk, different sorts of risk, but you've taken a view. Did you factor that into the price that you paid? Well, obviously, sorry, not Serbia, because that's cheap as chips. But have you factored into the Chile purchase price for the Turkish purchase price, or is this all come as a surprise and you're now having to sort of maybe discount and reassess your value on those assets?
100% the risks are factored in.
Right.
These are all risks that we're very well aware of, and this is a game of risk management. And this is one of the great aspects of being a royalty investor with a global portfolio, in that there's substantial diversification. There's political risk diversification, geological terrain diversification, on and on and on, commodity diversification, all of which we believe in. We believe that having a diversified portfolio and all these different aspects is very important. And are these risk factors taken into our analysis by a bunch of seasoned professionals that have worked their entire careers in the mining industry? The answer is emphatically yes.
Yeah, but you're facing SSR off. You're facing off against SSR, and they're going, "Come on, Dave, you worked in the country. You know it's bullshit. We're not gonna have any kind of discount here. This is the price we think it's worth. You got to pay this price because there are other people willing to step up and do this. So kind of being just, hey, Dave's a good guy. He's worked in Turkey." The conversation, the negotiation must have been harder than that. What were you pushing? What were they pushing?
So the negotiation, actually, because it was a process, the competition is with the other folks that are paying, not so much a competition against in a negotiation with SSR. It's more of a competitive bidding process, and then who has the best looking bid at the end of the day. And the key component, we were not the highest headline number, the way I've been told. The key component here was the EMX equity piece that SSR wanted and specifically said they must have in order to make this deal happen. And that's because they want to be a participant in our continued re-rate and the growth of the portfolio that we have built over the last 2 decades and will continue to build.
Okay, so let's look at that, because that's interesting to me, because someone offering more cash, at the end of the day, you'd be a royalty holder. You're not going to change the way that they go about running their business. But the EMX equity component was interesting to them because they valued that higher than the cash equivalent from others. That's what you're saying, right? And why I think this is important, why this is important, Dave, is because potentially, if you're looking at this another way, sometimes when companies sell things and they take equity, it's an overhang. It's like they're going to be, people think, oh man, I'm going to be selling this down. They're going to be selling this down. As soon as that 4-month hold comes off or whatever hold period comes off, they're going to be selling this thing down. And I've got a year of pressure there. You're saying they aren't that kind of company.
They've not articulated that to us in any way, shape, or form.
They never do, but which comes back to why take equity, not cash?
They specifically said that they had to have that share component in order to get this deal done. And we look to them as a long-term partner of ours, and hope that we, in the short term and long term, will continue to do more deal flow with them. Okay,
interesting.
We have a 18, 19-year track record for them to look at. And they know the kind of projects we generate around the world, and they're the kind of company that like to acquire projects.
Right. Okay. There's a bit of risk conversation. There's lots of other risk conversations we can have, but I just want to talk about that. Okay.
These are, man, I got to point out, you ask great questions, and a lot of people fail to understand that the complexity and the degree of risks that there are within this sector, and the risks are multiplicative. And so when you ask, are these risks taken into account when we do our analysis? Yeah, the answer is absolutely yes. And by a team of seasoned professionals. And it doesn't mean we always get it right. It does not mean that we always get it right. I feel comfortable with these 2 transactions at this point in time. But, let's see how it plays out over the course of the next 10 years.
Indeed. And therein lies the rub with royalty and streaming companies. And it takes some time for these things to play out and for us to actually go, well, they called it right, or they didn't call it right. Do you know what I mean? So I think it's we're sort of digging in at the point of contact, which is your negotiations with these companies, and back up how you can make a statement saying we bought cheap, we're the best value here, right? So, but look, conversation for another day. I'm sure we'll have you back on, and we can pick up on some of these things in the future. I want to, because there's only so much time.
Let me touch on a key point there, because
you're
asking a question that's very important. Everybody says we bought it the cheapest, right? EMX's differentiating factor, what makes us unique, is that the bulk of our royalties were grown organically. That puts us in a situation where we don't have to buy the next royalty. We can sit back and say yes, no, bid, lose, not feel bad about it. I don't have to buy royalties in order to survive, in order to grow the portfolio. We're going to grow this portfolio organically. That puts our ear on the railroad tracks around the world, within the various mining terrains. where we can pick off opportunities that we see to augment the royalties we grow organically through royalty purchase. And there's a number of small ones, not so small ones that we paid small amount of money for, that have done a nice job of augmenting that. $200,000 for the Timok royalty, great example. How about $250,000 for the royalty on Kaukua, which just put out the thickest, highest grade interval they've ever drilled, and that's turning into a fat platinum,
we'll get there.
gold,
we'll get
copper,
there.
nickel.
We'll get there. We will get there. I want. I got a stack of questions, pages. We'll get there. Right. Okay. So I hear what you're saying there, but it also comes back to that point of pace. There's a word I mentioned earlier. The pace of this organic growth, the perception again, the market is it's a very frothy market, royalty and streaming at the moment, right? You got a big new entrant who's going around making offers to everyone and anyone, hostile and otherwise, and they don't seem to care about buying cheap or buying the best. They just want scale, right? And then people are rewarding them for that. They're $600 million market cap company, like out of the gate. It's from that perspective. Interesting, right? There's a perception, but time will tell whether or not they will continue to be rewarded. That's another discussion. But for you, sitting in this arena, this ecosystem, where you're talking organic growth versus what you've done just before Christmas with these big acquisitions and the projects we're talking about, you've either got to say, well, I'll tell you what, that has brought a whole new sort of eyeballs on us. They do appreciate the value at which we are attributing to this and should be given to this. We'll go and do some more of that. Or you sit back and go, I don't need to move quickly because I've got the help from the prospect generating side of things and the staking your own packages and the organic growth and you're offloading bits and pieces here and there. You can move at your own pace, but in a way, can you afford to do that? Now you've entered kind of, please take this the right way, so big boy territory where it being, quite hefty acquisitions at the end of last year versus the sit back way. So how do you play that?
Well, we're never sitting back. All the things we do require our keen attention, first of all.
But I mean perception though. People just felt you didn't do much for a long term because you didn't have to, right? I'm talking perception there. And perception's reality most of the time. So I know you're busy under the furiously pedaling away with the feet underwater, but how do you move it forward on the surface? What are people going to be seeing more of from you?
Yeah, so I get the vein of where you're headed here, and certainly a lot of folks in our sector are very keyed in on deal flow cadence and on having those splashy deals that help drive shareholder interest. And to much extent that works. And you've heard me talk before about how we're a value player in a momentum business. And the momentum players are playing the momentum game, and Gold Royalty is doing a good job of that right now. This is exactly what they do. And it's exactly not what we do. All we're really concerned about is astute allocation of capital. And if that cadence happens fast, then it happens fast. If it happens slow, it happens slow. Our job is to allocate our capital astutely, manage the capital side of our business astutely, so we get the most bang for the buck that we expend across our portfolio. And even though, I've heard you say this before, even though the market yawns at our organic growth, long-term, I would vehemently say that is the most astute allocation of capital that we do. And if we can augment that by pouring fuel on the fire, by making a few acquisitions along the way, and sometimes big ones happen, sometimes small ones happen, sometimes they happen in quick succession, sometimes they don't happen for a while. That's all fortuitous. What's important to us is that it's astute allocation of capital as we build this portfolio.
Okay, and that's fine, but you got to be clear with investors and say this is the type of investment this is. It's not necessarily, I hate that phrase, get rich slow, but it's something like that. There's a certainty to it, but it's a gentle curve. No hockey sticks here, no 10 baggers here overnight, but we will get there with some good solid allocation of capital, and the returns are there.
We have done it and we'll continue to do it.
Right. Okay. But people need to know that, don't say, you don't bet the house on it. What you say is part of your portfolio should have something like this because it's good allocation of capital, right? That's the message.
Large part of my portfolio is.
Well, I bet. Right. Let's just kind of finish on a couple of other things, because I do want to move on to other topics here, which is, so very quickly, and so I should have asked this earlier, Serbia, obviously in our starting the process of arbitration, 6-12 months, whatever that ends up looking like, there's nothing slowing up the operations. There's no hindrance to things happening on the ground. They will crack on, and whatever comes out of the arbitration comes out of the arbitration. It's not a case of you've said down tools until we sort this out, right? Business as usual.
Yes.
Got it.
Yes.
Fine. Cool. Can we talk money? Because you just blew blew the whole lot before Christmas, right? So and you're sitting on, you kind of got used to having a lot of money in a bank, and you've gone and spent it wisely, right? You tell me. So you need facilities in place. I see a credit facility with Sprott, but what else is coming down the line? Especially now Rick's left Sprott. No need to hang out with him anymore, is there?
We actually see more of Rick now that he's quote unquote retired.
Good. Right. I hope so. So what are you doing about the finances? Yeah,
we will right now. The note that we have has a July 31st balloon on it. We will extend that note
it's
either
expensive.
via Sprott or somebody else and refinance that.
It's expensive. Why not get another facility in place?
It's so expensive is relative to where a company is at. If a company has substantial cash flow, then they're able to get a senior note from a major bank and have a lower cost of capital, lower coupon rate. Coupon rate's around 4%, which would be a fabulous number. Right now, this is a coupon rate of 7%. And of course, there's always the points to initiate the loan. The part of, and this is a key component with respect to the strategy here, part of the strategy of paying up to buy current cash flow will enable us to reach the point where we have that recurring positive cash flow from production royalties that will enable us to have that cheaper cost of capital in the future. And that's a key component to why we're doing this in the direction that we're headed. So we do not believe this is expensive capital relative to where EMX is at with regards to our growth strategy, because we do not have that recurring positive cash flow yet that enables that cheap borrowing of money, right? And so we're getting there. And we're actually quite pleased with the deal that Sprott gave us on this loan. And it does help get us to the next level to achieve that lower cost of capital in the future. And that's all part of what we're doing here. We will extend or refinance the note that we have on the books. We do not plan on doing a financing at this share price. We're pleased with the one that we did, and that gave us some nice comfort to continue to fund our business. And if we chose to, we could pay down the debt a little bit with the monies that we raised. We do see opportunity to allocate capital astutely right now in some interesting places in the world that I can't talk about yet, of course, but we do see that opportunity in front of us, and that summarizes where we're at.
Right. Okay. And where are you with cash at the moment? What is your cash? I know you've got a credit facility, but where are you with actual cash? Where you having to draw down regularly?
So we are right at 15 million USD in cash, and about that in tradable securities and long-term investments as well. And then we have about 44 million USD in debt to Sprott, and then a vendor take-back note for the VAT on the SSR deal of about $7.5 million.
Right. Okay. And that's with VTB, is that right? A VTB note, right? Yeah.
Vendor take-back note.
Yeah,
that's
vendor
correct.
take-back note. That's right. And what's the timing on it? Because you said it was about $7.5 million. When do you get rid of the? I mean, do you get rid of these things? Because you've got to be quite cute in this space, right? As you say, you know where you sit at the moment, and
so the vendor take back note. Well, first of all, that's for VAT.
Right.
That VAT we collect as production from Balya and production from Gediktepe come in. Unfortunately, it is denominated in Turkish lira. So we probably, just because the Turkish lira has been devaluating, we'll probably lose a little bit of money on that. It's not, it is what it is. You have to value VAT in local currency. So there's no way around that. But we do expect to receive that VAT back within 3-4 years, based upon production rates off those mines. And And then everything else is denominated in USD, of course.
Right. Okay. And obviously, you've had a relationship with Sprott and the facility there, which is great. But you're also on the NYSE. And are there American companies looking at you now? Have you reached a size which is interesting yet? Because you know what I mean. People they expect you to be over a certain size. They expect your shares to be over a certain value, and you kind of get access to different types of facilities. Yep. So are those conversations which are going on at the moment, or is this just another kind of Canadian finance story?
I feel a lot of phone calls from the big banks, CIBC, Scotiabank, BMO. Everybody wants to know where EMX is headed, and we look forward to developing new capital relationships and capital partnerships in the future. Right now, we're very pleased with the capital partner we have at Sprott.
Okay. Okay. So should we let's talk a little bit about I wouldn't mind the mentality, because I used the word ambition earlier, and I'm trying to understand that having been through what you've been through, and having seen the market reaction, and having seen a little bit of discounting going on, people are concerned about what's going on in Serbia, etc. Did you kind of prefer it the way it used to be?
Say that again?
Do you prefer things the way they used to be? It was a little bit less pressure than coming in with these bigger projects with this, spending vast
We're
sums of
delighted
money.
with where we are today.
Right. Okay. So are we going to get more of the same?
2022 is going to be a very exciting year for us, with initiation of strong cash flows coming from Balya, coming from Timok at whatever the royalty rate turns out to be. And I'm confident that will be 0.5% or very close. And then very importantly, Gedek Tepe, which is a cash cow for the first few years from the 10% royalty on the oxide zone there. They've already poured their first doré. We start getting royalties after 10,000 ounces have been poured, which is forthcoming in the next couple of months. So really excited about that. And of course, the Caserones mine's already paying us. These are all very important events. 2022 is going to be a big year for us. We don't regret any of these decisions, if that's what you're insinuating. I'm happy to be in the hot seat, and this is we're going down the path that we want to be going down, and that's becoming a bigger company.
So Gedek Tepe, Turkish, gonna be 10% royalty on that. How on earth does a company make money at those levels?
So just so you understand how that came to be, it's always good to know the history of these things. When the predecessor to SSR sold that asset, they part of the sales price for their 50%, I believe it was 50% equity that they had in that mine, rather than cash payments, they just said, well, we'll take a large royalty on the highly profitable upper oxide gold and silver enriched zone as a mechanism for paying for the project. So it was negotiated as part of the purchase price when Lydia consolidated 100% ownership. That's how that came to be. And it was already at that point in time understood that the economics of the upper oxide zone were excellent and could support a 10% royalty. And they decided that that's a convenient way to pay for the deposit. And then we have stepped into SSR's shoes by buying that royalty position. So now we will be paid for that deposit. And so that's fantastic, immediate cash flow. And the beautiful thing is that they continue to explore for more oxide. And another great thing is that we have a 2% royalty once they get into the polymetallic sulfide zone.
Are you expecting a phone call saying we need to renegotiate this?
No, I'm not. And we have good communications with Lydia. We just recently visited site, actually.
Mm-hmm. Yeah, no, I saw the article. They gave you a detailed update on that.
Good company.
Yeah, absolutely, a great company, right? Okay, should we talk about some of the other near term? Because I mentioned these sort of near term revenue components to this, and obviously we need to define what near term looks like. So we talked about some of the bigger projects. You mentioned Kawakawa. You want to talk about it in Finland. I've just come back from Finland, and we've interviewed a few Finnish companies actually last week as well. So it's a good place to do business. But what are you seeing there?
Well, Palladium One is doing a fantastic job.
They are.
They're at Kaukua, their flagship property. They continue to chase the igneous stratigraphy. These are layered mafic intrusions with beds, if you will, igneous beds of enriched metal horizons, palladium, platinum, gold, copper, nickel, commodities that we love. And they continue to step out and chase the geophysical anomalies which identify those metal enriched zones. And the last drill holes they announced were the best drill holes ever. And we're just delighted as royalty holders to be exposed to that. This is turning into a significant metal endowed project. This will almost certainly be a mine, the timing of which I do not know. And this is a great example of royalty discovery optionality at no cost to us. The project's being worked, a substantial amount of money is being spent, and the amount of endowment is increasing, all to our benefit. When it comes to actually saying, well, when are we going to see the checks rolling in? That's one of the interesting aspects of this, is it could be still a long time, several years away.
Well, I think so. What are they? 50 million market cap company. I think they want to be doing more drilling this week, but I said the results came back recently. Higher grade, and they've got a plan. So I think that's something to look forward to for sure. So just in terms of kind of, I don't want to go through the whole portfolio because it could be exhaustive, and I think we've taken up a lot of your time today. Maybe it's one to come back and discuss. But in terms of maybe we go on to a little bit of guidance in terms of what have you or will you be issuing guidance in terms of revenue flow coming through? Because again, how your peers measure themselves, and we want to get a sense of how we measure you in the market. So any guidance coming up soon?
Yeah, so our CFO, Doug Reed, is working diligently on developing a 5-year model from the existing assets. And we do hope to be in a position where we can give annual, if not quarterly, guidance to the market. There's a couple of key things that need to be completed. We need to get our shelf filing done. We need to have the technical reports up to date so that these aspects of guidance that we give are fully legal and covered by the technical reports.
Okay. I think that'd be good news indeed for everyone. And I think in the context of, I've taken up a lot of your time already, and I've got maybe another 3 pages of questions. I would ask, perhaps you can come on relatively soon, and maybe we can cover off a few more of these, maybe drilling and getting into the weeds a bit and drilling down to some of these other the rest of the portfolio. That might make sense. Are you up for that?
I'm absolutely. There's nothing I enjoy more than answering your hard questions.
You're a star, sir. Well, we will, Dave. Thank you.
Delighted to.
Very much. Thank you very much for today. Glad you had a great Christmas. I'm looking forward to seeing how this thing evolves and develops for sure. We'll see you soon.
Happy New Year. Thank you.